Hello, in this video, we're focusing on the practical concepts that you can actually apply in the real business world. Hope you enjoy it. Let's get on with it. Today, we're looking at Synthesia, a London-based AI startup that has quickly reached a $4 billion valuation after raising $200 million in its latest funding round. This company is a leader in AI-generated video using digital avatars to create content mainly for enterprise needs like training and internal communications. What's interesting is that they focus on practical video solutions that prioritize clarity, speed, and localization over high-end cinematic quality, which has really helped them gain commercial traction. The fresh investment, led by Alphabet's GV and supported by NVIDIA's Ventures, among others, shows strong confidence in both the company and the growing UK AI scene. Synthesia also recently set up a secondary sale, allowing early employees to cash in, signaling the company's maturity as it scales. In this presentation, we'll dive into their business model, strengths and weaknesses, competitive advantages, and financials, all of which offer useful lessons for founders and operators looking to build successful AI ventures. Synthesia's platform transforms written scripts into videos featuring lifelike avatars that speak over 100 languages, which allows companies to create onboarding, compliance, and training materials without needing cameras, studios, or live actors. The next step is adding interactive AI avatars that can answer questions and simulate role-playing scenarios, shifting from simple one-way videos to two-way learning experiences. Their focus is primarily on enterprise clients who have steady budgets for training and global needs for localization. Well-known companies like Bosch, Merck, and SAP use the platform, showing its credibility in regulated and multinational markets. Synthesia follows a SaaS model with both self-serve and custom enterprise plans, often starting with learning and development teams before expanding to other departments through localization. Growth mainly comes from customers landing and expanding by translating content into multiple languages, iterating quickly, and using governance tools designed for large teams managing multi-year, multi-country programs. The company has a strong position in corporate training, where speed and consistency are crucial, and it's already demonstrated solid commercial traction with over $100 million in annual recurring revenue as of April 2025. Strategic investors like GV and NVIDIA's venture arm provide capital plus ecosystem benefits that help accelerate product development. Moving toward interactive AI agents deepens the value for learning and development by enabling coaching and assessments, not just content delivery. Finally, Synthesia's success also supports London's growing reputation in enterprise AI, helping attract talent and customers across the UK and Europe who prefer local leadership and compliance. Video generation requires significant computing power, which means costs and margins can be affected by factors like the efficiency of the models used and cloud service pricing, an area where competitors can also find improvements. The market moves quickly, with competitors rapidly improving features like voice realism and expressions, which reduces the time Synthesia can stand out. Since much of Synthesia's revenue depends on enterprise learning and enablement budgets, it faces longer sales cycles and potential pauses in spending due to broader economic factors, even though customers tend to stay engaged. There are also challenges related to synthetic media, such as ensuring brand safety, consent, and regulatory compliance. These factors extend sales processes, though Synthesia's focus on enterprise security helps address these concerns. On the upside, Synthesia's strength lies in its deep enterprise focus rather than flashy consumer offerings, providing reliable, scalable, and governed solutions that large companies require. Their template-driven, collaborative platform fits smoothly into existing workflows, supporting everything from creating and localizing content to updating and measuring its impact. Strong backing from investors like GV and Ventures, along with major clients such as Bosch and SAP, builds trust within cautious enterprise buyers. Lastly, strategic employee incentives, supported by Nasdaq-facilitated liquidity, help keep talent motivated for the long term without the distractions of immediate IPO pressures, which is crucial in today's competitive AI talent market. Synthesia recently raised $200 million in a Series E round at a $4 billion post-money valuation, led by GV and supported by several prominent investors. By April 2025, the company achieved over $100 million in annual recurring revenue, with continued growth reported into early 2026, which supports its strong valuation. The funding is primarily aimed at enhancing interactive and agentic video capabilities, along with expanding enterprise features that improve learning and knowledge management workflows. Additionally, there was a structured secondary sale to provide liquidity to employees while keeping the company private. Customer feedback and reports highlight faster content creation cycles, global reach with multilingual avatars, and better engagement through interactive training materials. Clients like Bosch, Merck, and SAP show adoption in sectors that require compliant and frequently updated training content. The overall view is that AI-generated video will become as commonplace and easy to produce as slides or documents, helping large organizations manage knowledge more effectively. Synthesia's key strategy lessons include focusing on a specific high-value enterprise need, training and internal communications, which are repeatable and budgeted with measurable results, rather than pursuing viral consumer markets. Moreover, introducing two-way interactivity transforms videos into active coaching tools that support role-play, Q&A, and on-the-job assistance, which increases user engagement and return on investment. Using credibility flywheels is key. Partnering with well-known customers like Bosch, Merck, and SAP, along with strategic investors such as GV and NVIDIA, helps shorten sales cycles and reduce risk for buyers. Building a strong signal stack with referenceable customers and strategic capital creates trust, especially with conservative buyers. Expanding distribution through localization isn't just adding a feature. It turns one product into many by adapting across languages and regions, which multiplies usage and customer retention. It's important to find product behaviors that naturally encourage this kind of growth, like translation or templating. Retaining talent early is another critical factor. By facilitating liquidity for employees without rushing into public listings, companies can keep motivation and hiring strong over long private periods. It's also vital not to mistake flashy model novelty for real customer value. Synthesia's strength lies in enterprise reliability, governance, and fitting smoothly into workflows, which provide a sustainable edge over competitors focused only on realistic demos. Finally, capital should be seen as a capability, not just a runway. The $200 million raised gives access to GPUs, partner ecosystems, and credibility, all of which accelerate growth in this compute-intensive space. Overall, Synthesia's success comes from disciplined focus on solving a high-value problem for demanding clients, combining localization and interactivity, securing strategic capital and reference customers, and designing talent incentives to sustain long-term momentum. This approach builds a scalable, defensible business rather than just riding the wave of AI hype. If you found this video useful, there's plenty of more business and finance videos on the channel that you'll enjoy watching and get great practical value from. In the meantime, thanks for watching.